administratively capable and has internal controls to ensure program accountability. And that's where the VCA comes from. So financial viability, that's why we're looking at asking for your banking information or an audit if you happen to be a nonprofit organization that does an independent organizational audit. Most of our institutions don't do that. It would be our large ones. So the vast majority will need to submit your banking information to show your financial viability. And we kind of touched on that for those of you that were in the training this morning on your budget. You know, what we consider financially viable means is that you can operate without our funds. So you've got to have some other funds coming in to support this program. Administratively capable just basically means that you can follow the guidelines, you understand them, and that you'll remain in compliance with all of those while you're participating. And then also you have internal controls for your accountability for not just financially, but for for the program requirements, record keeping, menu planning, things as simple as that. Okay, so I kind of already touched on that. Why are budgets necessary? They're to ensure that you are financially viable and that you are accountable and can remain in compliance with our program requirements. The budget that you're completing in the application, it really is just a projection. But it must truly reflect your anticipated financial needs and your resources of what it will take to operate the program. So it's kind of hard in the beginning because you guys are just getting started. So you're really just kind of taking a guess, but you already have to supply and provide meals at your center. That's part of requirement for DHS. And what they require on their menus is pretty congruent with what the meal patterns require in USDA. And that's sort of on purpose. So as long as you have that past documentation, you kind of got something to go on to know what to expect and what what to budget. But just know, just like with any of your application, it's a living document, it's a living thing. So it's always changing. So we've learned that the hard way this year, that as soon as we think we've got it under control and we've got it budgeted and we've got it figured out, COVID makes us change something else. So just know nothing's really set in stone. If you need to update your stuff or you understand it better later and need to go back and change it, that's fine. So we just need it always to be the most up-to-date and most accurate information in any of this. And the VCA is just trying to capture what your plan is, what you intend to do, and to make sure that you're viable and can operate in the event that sometimes we aren't able to pay. Unfortunately, the entire state of Oklahoma this month or this week is experiencing an example of that. There's just times that things happen that are out of our control and we can't make payments, and you got to be able to, provide it some other way. So just like you were in the one this morning, at any point, you guys just interrupt, ask any questions. I kind of already talked about all this. You have to account for all your costs. And you always have to disclose any sources of funding, anything. So if you've already submitted something to me for your VCA, you've probably already experienced me asking lots of questions. We'll probably talk about this a little later, but one of the things we see the most of when we talk about you got to account for all costs of operations through, a consistent application of generally accepted accounting principles. What we're really looking for is that you're documenting well all your income and all your expenses, and that you know exactly what, when we start paying you CACFP funds, if it's going into one commingled account, you have to be able to track where that's going. There's a couple of specific things we're looking for when it comes to your budget and your finances. Number one, this program, you're required to be operating at a nonprofit status. Now, that doesn't mean your business is a nonprofit, because you are, I think most of you in here are for-profit daycares, but that's aside from this food program. This food program is intended to be a reimbursement for costs that you would already be incurring, as long as you're meeting the requirements and the regulations. So You have to be able to way to track those to show, number one, that you're spending it all, and that number two, it's on allowable cost. Also, we need to see sources of funding. So that's something that I've looked at when I get the bank statements or what have you, or audits. We're looking to see where you get other funding. Most of you guys, it's DHS subsidy, it's private pay. Some of you might have tribal contracts. So that's the alternate sources of funding. And unfortunately, there have been times where, you know, some people have to rely on their own savings or loans, and that would be an acceptable means, not permanent. But those are the kinds of things we're looking for to make sure you're financially viable. We have 5 types of institutions that must submit a budget. Basically, all of our institutions have to submit a budget in this program. So our independent centers, which I think is all of you in here today, family daycare home sponsors, sponsors of centers, and then other organizations that operate maybe at risk, things like that. So anybody that comes and applies for our program has to prove their VCA, and they also have to have a budget. All right, so who are the key users of the CACFP budget? So the CACFP institution, it's used to document anticipated earnings, expenses, and non-program funds that will be used in the administration of the CACFP, used to obtain required approvals of program costs, and used in the ongoing management of the program. That's just easier or summarized of what I've just said. So you've got to document your earnings, your expenses, what we consider program and non-program funds, those have to be kept separate. So program fund, that would be anything CACFP related, obviously. Anything that doesn't have to do with an income or an expense for CACFP or the food service would be your non-program funds. As a state agency, it is our responsibility, and I've kind of already rambled on about this, that we determine your financial viability, and we have to determine that there are adequate financial resources to withstand temporary interruptions of CACFP payments, like I already said, like one we're having this week. If it ever happens, it's usually minimal, but there's sometimes just no way to anticipate if that could happen. So you have to be able to still provide these meals and the service without our funds. Also, we have to know, and that's one of the questions of the VCA, if you're able or how you will repay any debt owed to us, and that's what determine whether institution can continue to operate when fiscal claims are assessed against the institution. What that means is if you ever owe us a debt and we have to assess fiscal action, meaning we have to take back money for that current year, and it's going to happen, you know, everyone gets a non-compliant review. Not a big deal. It happens. You make mistakes. We come out and do an administrative review. We find that you maybe made some errors, or you didn't have a label to support this meal or this food item you served. Anything, it's, you know, could happen that we would have to maybe take back some meals. We have to know how you would repay that, because you cannot use CACFP funds to pay for a CACFP debt. Excuse me. So we have to know you have some other source of funding to pay for that. We also have to ensure that all costs are necessary and reasonable. And if in the event that they aren't, and then you can't use CACFP funds to pay for it. And so that's kind of hard to determine for a new institution, because really we're just kind of looking at I'm looking at your bank accounts and seeing the purchase that you make, the transactions that could be considered an allowable cost. So like I said, most of you were in here on the training this morning and we talked about it. You know, a portion of a lot of things for your administrative costs, like salaries, utilities, rental, lease of equipment or your space, those are all allowable costs. And so I'll look for those and to see that those costs are there. But then also we're going to look for obvious transactions of places where you're buying food and food related purchases. So it gets a little tricky when you have those commingled accounts. It's not required that you guys have a separate bank account to where we deposit money and you spend it from, but it would truly be the easiest way for you to track that. You know, we do provide paperwork that you guys will have to complete on a monthly basis to track all those costs. You have to keep up with your receipts, and you have to enter those on a food purchasing form, and then you have to enter all those transactions on an expenditure worksheet. If you haven't been to the administrative and purchasing training, I'm not sure when the next one is. Maybe on the 12th. I could be making that up. You'll learn about those there on how to record those. But that has to be done regardless. But it still is hard for us to track that. We have to look at what you're paid and what goes out and make sure that you're spending it all and that it's allowable. So if you had a separate bank account where all those were transactions, that all it was related to CACFP, that would benefit you, but it's not required. Like I said, I kind of get ahead of myself, but really this is talking about what's reasonable and allowable and necessary cost versus unallowable cost. Do you guys have any questions on what would be considered allowable or not unallowable cost? I don't want to keep repeating myself because I kind of already went there. You know, just about anything that you guys have cost in your business for, just about any of it would be considered a reasonable cost that you could pay, you know, use CACFP funds to pay for it. I'm gonna skip through this. So what are acceptable support documentation that you can submit? And like it says, it's not just limited to this. I've taken all kinds of things. Just as long as you guys can show us, we need to see your revenue, your income, and then we need to see your expenses. And so something in addition to that, that if I see, which many times you all have what we call the commingled account. If you have one account where everything's going into it, I need you to tell me your plan for how you'll make sure to track all those costs if you're going to keep it that way, or if you're going to have a separate account. But some of the things we're going to look for is available cash in the bank, your savings or checking, what have you. If we see transfers to and from outside accounts, I will ask for those, because that's just to ensure us, we got to see when our money starts going, you know, when those federal dollars start going into your account. If you've got other accounts where you're transferring money to and from, we need to have access to those as well to make sure that it's all being spent appropriately. So that's why I keep going back to, if you just have one account where it's going in and coming out, it's going to make it a lot easier for you to track and for us to see what we need to see when we're doing a review. Personal funds, we already talked about that. Those are all the kind of types of income you can have. Most of what I see is your DHS payments and private pay and things like that. On the expense side, you can submit a lot of these other things, but typically the bank statements are sufficient, along with any other supporting documentation on what your plan is for if it is a commingled account. So if you're not using QuickBooks or even ProCare, things like that, that have a way to help you itemize your expenses, you need to start thinking now about how you're going to do that. If you're not going to have a separate account. Like I said, even though you still have to do the expenditure worksheets, you got to have a way on the finance side to keep up with how that's being spent. We already talked about this. What does financial viability mean? It means that you have the money, you have the finances to operate on a daily basis, with or without our funds. You have the resources to pay employees and suppliers during temporary interruptions. You also have to have the funds to be able to pay a debt when you owe it. And also have to have the ability to document your financial viability. Just because, you know, you give us the plan and say you are, we need to see it and see an example of a report or how you're keeping up with those things. financial viability is not just identification that you have a balance of cash. So you might have a savings account with a large amount, but just because you have a positive balance somewhere doesn't mean you're viable and that that's enough to maintain the operation of your program. We need to see continual reoccurring funding. And so a lot of times, like I said, it's going to be your DHS and your parent payments. If we look at 12 months of that, you just see that's your continual source of funding outside of the food program once that comes. It's also not just a line of credit, because your line of credit only goes so far. And all the other things, all these things together would help your financial viability, but any one of those alone wouldn't be sufficient. We have to make sure that you have a plan that you can operate, like I keep saying, without the federal dollars of this program. So I may or may not have sent you guys, when I first started sending these out, the VCA documents, I sent the regulatory instructions, and it's like 100 and something pages, and it sort of it made people even more nervous than the document did. So I quit sending them out. But if you have any questions or you need something in writing, I mean, I know people are weary about sending that kind of information, especially through the email. I get it. If you want to hand deliver things, that's fine too, whatever is more secure. We're working on a better, more secure way to transmit files, but we're not there yet. But if you need something to know where those regulations come from, I can provide that regulation and CFR and FNS instructions to you that you see here listed. But pretty much within the VCA document, it lists the exact regulations where all this is coming from and why we're asking what we're asking. And it's really the end of the PowerPoint. If you have any questions about the VCA, you guys, I've been in communication with all of you, or you can always reach out to Jennifer Weber, who is our executive director. But like I've told many, fill out that form, submit what you think is what we need, and I'll look it over. It's not like if you submit it and it's wrong, we'll just say, sorry. I'll just keep asking you until we get, till we get what we need. So don't be afraid to just start somewhere. Like I said, that's really all I have. Is there any questions you all have, or any specific areas on the VCA that you are stumped on or you want me to go over? Yes, no. The one thing I can ask you to make sure you do on the actual document itself, some of the questions are kind of confusing in the way that they ask them. It also asks it in kind of the form that you are already doing it, but you guys are brand new, so you're not. So when it asks about how are you distributing family size and income applications, you aren't doing that yet, but you need to explain after you've had the trainings and you understand what's required, that it has to be done on enrollment, and once a year, every year you have to renew them. That's how you need to answer. So make sure you're being very detailed in your responses. There's a couple of questions in that VCA document that I know trips people up because it makes it sound like we expect you to have a board. So there is a page where it asks for board members or for-profit officers. If you don't have a board, then you would list the owners on that page. And you need to explain how the owners provide oversight. So it does say something about board members, but it also says for-profit officers, and that would be your owner. So just think of that, keep that frame of mind. When it asks questions about oversight or who's doing this or that, what is the owner doing to ensure that this program, or what will the owner plan to do, or the director, to ensure that the requirements of the program are met. Any questions? You guys are really quiet. If you don't feel comfortable asking here with the group, you're welcome to email your questions to me. I know sometimes I'm hard to get a hold of on the phone because I'm back and forth, not always, I'm teleworking some days. So if you can't catch me on the phone, shoot me an email. Like I said, do it the best you can and submit it. And if we still need more, then we'll go from there. But what we're looking for is just to make sure that you have ample sources of funding and that you're spending spending money in allowable ways. What would be considered allowable once you get CACF done. That's all I have. Unless you have questions, you guys can go about your afternoon. I appreciate you logging in.